In this video, I'm excited to share an indicator-based trading strategy rooted in ICT, smart money concepts, or simply put, price action. For today's strategy, we're going to use two of LuxAlgo's most popular indicators, along with an additional indicator to help us stay aligned with the overall trend direction. I've tested this strategy on micro silver futures to see how it performs in real market conditions. By the end of the video, I'll share the full breakdown of my trading results. Here's something you should know about. Black Friday is just around the corner, and LuxAlgo is bringing their biggest sale of the year starting November 25th. You can grab up to 65% off their ultimate plan using my link in the description. And here's the kicker. It includes access to a brand new AI-powered tool that's launching the same day. This incredible deal ends on December 1st. Plus, you can extend your subscription to the limit and lock in these discounts for up to 3 years. So without further delay, let's dive right in. Today we're going to learn a powerful trend trading strategy based on price action. For trend traders, the goal is to enter positions in the direction of the prevailing trend, using market structure to guide our entries. In this strategy, our first entry condition is based on the CHOCH plus signal, which helps us identify reliable points of trend continuation. First, we want to open TradingView and select an asset and time frame that suits your trading style. To get started, open the Indicators tab, and first let's add LuxAlgo's Price Action Concepts indicator. This is a premium indicator. This video isn't sponsored by LuxAlgo. However, if you're interested in testing it out, they offer a 30-day refund policy, so you can explore the tools and see if they're a good fit for you. For our second indicator, we want to use this one, the Oscillator Matrix. And for our third indicator, we want to search for exponential moving average and add it to our chart. Alright, now let's adjust the settings of the Price Action Concepts indicator. For this strategy, we are only going to use internal market structure, and we will only use the CHOCH plus labels. And now listen carefully. For bullish CHOCH labels, you want to change the color from green to red, and for bearish CHOCH labels, you want to change the color from red to green. I'll explain that in a minute. Now make sure only the market structure labels will stay enabled, so you want to disable everything else within this toolkit. Then click OK. Let's start by explaining what a CHOCH is. CHOCH stands for change of character and marks a potential reversal in market direction. A CHOCH appears when the price breaks a previous swing low in an uptrend, giving a bearish CHOCH, or it breaks a prior swing high in a downtrend, giving a bullish CHOCH. Now, there are two types of CHOCHs, a leading CHOCH and a supported CHOCH, also called CHOCH plus. First, there's the leading CHOCH. A leading CHOCH appears without any prior signs of reversal in the trend. For example, in an uptrend, there is no failed attempt to make a higher high, and in a downtrend, there is no failed attempt to make a lower low. And then there's the supported CHOCH or CHOCH plus. A CHOCH plus has early signs of a trend reversal. This means that before the CHOCH appears, there was already a sign of weakness in the trend. For instance, in an uptrend, if the price fails to make a new higher high before breaking a swing low, this is labeled a bearish CHOCH plus. In a downtrend, if the price fails to make a new lower low before breaking a swing high, this is labeled a bullish CHOCH plus. So CHOCH plus is more reliable than a regular CHOCH because it shows that the trend was already weakening before the actual reversal signal. Remember, when we adjusted the settings of the indicator, we set the bullish CHOCH plus to red and the bearish CHOCH plus to green because we're actually using these signals as entry points in the opposite direction of the label. Here's the logic behind this. When a bullish CHOCH plus appears, we've colored it red because it signals that an uptrend is losing strength. This can be a good spot to consider a sell entry, as the market may be shifting down. Similarly, when a bearish CHOCH plus appears, we've colored it green because it tells us that the downtrend is losing momentum. This serves as a potential buy entry point since the market might be starting to shift up. By using these opposite colors, it's easy to see where the trend might weaken, making it a logical time to look for entries in the other direction. If this isn't fully clicking just yet, don't worry. You'll definitely understand the logic behind this approach when we get to the trading examples. Alright, let's set up the Oscillator Matrix. First, disable all the options. Then set the hyperwave length to 200. Next, enable the Show Confluence Meter option and set the meter width to 10. Click OK to save the settings. Now click on the three dots menu, select Move Pane to, and choose Existing Pane above. Next, let's adjust the EMA. We'll set its length to 200, change the color to blue, and increase the line thickness for better visibility. And that's it. So when exactly should we enter and exit buy or sell trades? Let's go over the exact rules for a buy position. For a buy trade to be valid, there are 3 conditions that must be met. First, the current price action must be above the 200 EMA. Second, a green CHOCH plus label must appear. Third, the confluence meter must be above 50. To confirm this, check the scale of the confluence meter on the left side of your chart. And here you can see that the small arrow of the confluence meter is above the 50 mark. This confirms our third condition. With all three conditions met, we'll open a buy trade at the close of the current candlestick. For the stop loss, we'll use the most recent swing low. And for taking profits, we'll aim for a 1-to-3 risk-to-reward ratio. Let's go through another example of a buy trade. The first condition is that the price must be above the 200 EMA. Next, we need to see a green chalk plus label. And finally, the confluence meter must indicate a value greater than 50. As all conditions are met at the close of the candlestick, we're going to open a buy trade. For the stop loss, we'll set it at the most recent swing low. And for profit taking, we're going to target a 1-to-3 risk-to-reward ratio. And the exact opposite is true for sell trades. For a sell trade to be valid, there are three conditions that must be met. First, the current price action must be below the 200 EMA. Second, a red chalk plus label must appear. And third, the confluence meter must be below 50. To confirm this, check the scale of the confluence meter on the left side of your chart. And here you can see that the small arrow of the confluence meter is below the 50 mark. This confirms our third condition. With all three conditions met, we'll open a sell trade at the close of the current candlestick. For the stop loss, we'll use the most recent swing high. And for taking profits, we'll aim for a 1-to-3 risk-to-reward ratio. Let's go through another example of a sell trade. The first condition is that the price must be below the 200 EMA. Next, we need to see a red chalk plus label. And finally, the confluence meter must indicate a value lower than 50. As all conditions are met at the close of the candlestick, we're going to open a sell trade. For the stop loss, we'll set it at the most recent swing high. And for profit taking, we're going to target a 1-to-3 risk-to-reward ratio. Alright, at the beginning of the video, I promised to show you the backtesting results, and now it's time to deliver on that promise. I've tested this strategy 100 times manually on the micro silver futures chart on a 6 minutes time frame, and here are the results. I started with a $1,000 account balance. I used 10% of my account per trade, adjusting as my balance changes with each win or loss. For example, if I profit $100 on a trade, my new balance becomes $1,100, and I use 10% of this updated balance for the next trade. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.